Good evening, ladies and gentlemen. Today is the 7th of May, and generally on Fridays, what you find is if there isn't much of a movement, you get to see a pretty good fall off in premiums. But to begin with, premiums right now are not very high, and what we saw was an opening where we had an IV expansion right after the opening, and post that, there was pretty large call side IV expansion followed by a steady down move. Something that was evident throughout the entire day was the kind of bullish positioning that was building up on the OI. It was very evident that puts are being written all the way up to 15,000 in this week's expiry, and at every strike below 14,800, you're seeing call unwinding. And also, if you look at the monthly open interest, there's call unwinding happening at 15,000 and put writing happening at 15,000 in the monthly. So right now, the way if you look at the OI, it is positioned relatively for a range break. So this 14,500, 15,000 range that we've been for in a long time for, it's positioning for a potential upside range break. This is in no way a guarantee. It's just that's what market is positioning towards. In the second half, I made a mistake while exiting. So overall for the day, I was up 0.5%, which was fine. But I was up a little bit more than that. I was up about 0.75%. And as I was exiting, I made a manual error in setting up the basket to exit both the put and the call. And I exited the put without exiting the call, and that kind of burnt me as the calls expanded by 2 points. So an execution error actually cost me 2 points today, but this is completely part and parcel of what happens in the market. You can't let it get you down. You make a mistake, and you're going to get punished for it. So next time, it's more of a reminder that don't forget to check if your basket has been set up perfectly or not. All that being the case, I hope you had a good trading day. Not much would have happened today. Not many people would have made any money or lost any money. If you tried to short the market while it was heading down, it was more or less evident that there's no reason to short the market. Then you might have lost money there because there was a slight put side expansion at some point. And if you tried to buy into that, you would have got a little burnt on the reversal. Because as far as the OI was concerned, it was bullish all day. It was clearly a lot of bullish positionings being built up. Thank you so much for watching. Have a great weekend. Enjoy your time with your family. I will catch you next on Monday. Take care.
Want to meet like-minded traders and discuss option strategies, adjustments and more? Just type in Discuss Nifty in your Telegram search box and join the friendly trader community.
Good morning, ladies and gentlemen. The pre-market has just settled and looks like we're having a considerable gap up of 80 points, opening exactly at 14,800. Now, the idea here is that a continued up move will eventually have to get a lot of the shorts which are there across expiries, especially in the monthly, to cover, which might lead to a considerable up move. But at the same time, I think we're at the upper end of the range, which would be towards 15,000, 15,050. So there's a good chance that the gap up gets sold into. Now, how will options prices react? What's going to happen at the open is before the calls start getting covered, the puts are going to crash. The first thing that's going to happen is the put option prices are going to crash immensely. And the call option prices will not necessarily go up as much because the covering will not be immediate. It's not a drastic enough up move to trigger that kind of covering. So the calls will not have too much value, but puts will lose a lot of value. So we will wait now and see what happens in the first 15 minutes and let there be some stability because there might be some mispricing of options in the beginning. You might say puts lose a lot of value, but if the gap up gets sold into, they'll very quickly gain back a lot of that value. So today being a Friday, it's a relatively good day for DK because over the weekend nobody wants to hold long options, especially in the weekly, and they'll start to unwind. In a gap down, there's generally a spike in IV where the put prices go crazy, and that's why it's good to sell into that IV spike, especially if your view is range bound. But in a gap up, it can work against you because in a gap up, the puts lose a lot of value and you've entered at a bad price if you're selling a triangle. So from the perspective of what's happening on the index, we're opening somewhere around here, and the range that I'll be working with right now is a range where by selling a call option above 15,050, which is the recent swing high, you can say, and has acted as, you can see this has acted as a resistance multiple time, and this support here. So anything below 14,500. So 14,500, 15,050, more or less the range that I'll be working with. The idea is not to take too much directional risk, we might actually have a day where we see an up or down move from here of 100 points from where we open. But at the same time, being a Friday, we'll try to just capture whatever decay is possible in between. Okay, so some amount of call side IV expansion where calls continue to expand without puts decaying a single point. That's because the fear on the call side is going up, also referred to as call side expansion. Simply because of this, we're down close to 5 points because the calls are just expanding with puts not moving a single inch. Basically, what that communicates is the guys who have sold calls, now suddenly they want more to sell the same calls, and the potential risk reward perception on the call side has gone up, whereas the potential risk reward on the put side has not come down because the guys selling the puts are like, where at the upper range is a good chance it'll come down, and the buyers are also thinking on the same lines. And the guys who are selling the calls are like, we're moving up, so my risk is going up, I need more. And yeah, that IV expansion is starting to burn a little bit. Now we're down 6 points just from call side IV expansion. I expect this to normalize either by calls coming back down to earth with a red candle or puts starting to lose a lot of value really fast. So that being the case, today's stop loss will be something on the lines of 10 to 12 points because today is Friday, and since I've kept a smaller range, we'll be benefiting quite a lot. In case we continue to remain range bound from here, this position could easily give up 20 points. So that being the case, 15 points is more or less the stop loss. If we continue to head higher, we start testing towards 14,900, then I'll be risking off on the call side. Currently into an IV expansion, I don't want to take an additional credit on the put side, just will be more or less risking off at different points of time. So yeah, as you can see, the calls continue to expand, puts not losing any value. So that's just the IV expansion. An IV expansion is generally the worst possible time to do any adjustments because at that point, reversal will burn you. So Bank Nifty has gapped up, hit all the way up to 33,200, but from there has seen some sort of stability. Reliance also has made up move till 1950. IT is also gapping up. So there's strength in everything. But what will be interesting is to see how much further this strength continues. HDFC Bank up 1.5%, TCS up 1.5%, everything in the deep green. So that's what is leading to the call side expansion. The puts definitely not losing any value at this point of time. We'll keep you posted. The time is 9:40. Okay, so something to note right now in the weekly OI. So all the calls below 14,800 are starting to get unwound. 14,800 and above is seeing call writing with strong put writing at 14,800. So many positions building up around 14,800 short straddle for the week. So current pricing, if you look at it at around 260, 270, that you roughly say 300 points up down is the potential range from here, which seems fair enough. So 15,100 on the upside and 14,500 on the downside, more or less standard what we've been seeing for a while. What's more interesting is the monthly Nifty OI, where we are seeing put writing at all levels all the way up to 15,000, right, which is now in the money by 160 points, and call unwinding all the way to 15,000 as well. So 15,000 call unwinding with 15,000 put writing in monthly might suggest that we will eventually start to break range and most probably on the upside. But for now, definitely the range remains. We are still very much in the range of 15,050 and 15,500. So yeah, the IV expansion is slowly starting to cool off. And since we have a relatively higher risk reward position, we potentially stand to benefit anything from 15 to 20 points easily, as long as we stay in the 14,800 to 14,900 range. And overall, it should be a pretty good day for strangles considering it's a Friday. But we'll keep you posted. The idea will be to risk off on the put side if we start testing 14,800 on the downside, and to risk off on the call side if we start heading towards 14,900. This position neutralizes in delta at roughly 14,825. So for now, quite comfortable in this position. Okay, so we've seen a quick down move, and more or less it's coming from the entire market dipping. But the open interest of puts and calls both at 14,800 is increasing. So that gives you more or less a sideways view from 14,800. Now, just taking a look at the option chain. Right now, maximum call side open interest is 16,000, and that really doesn't mean much. And on the put side, maximum put side open interest is at 14,500. Right, and significantly speaking, from the call side, maximum open interest is 15,000. So once again, we are reaching a situation where 15,000 is maximum call side open interest. That's significant, and 14,500 is maximum put side open interest, with 26 lakhs on the put side contracts and 28 lakhs on the call side. Now we're also seeing at this point of time, from where we are, considerable increase in OI of both the 14,800 put and 14,800 call, and currently this is available for 127. So both of them put together is about 270, you can say, roughly, slightly under. So 300 points plus minus probably for the weekly range is what makes sense. That, once again, 300 points plus minus gives you maximum put side open interest, as well as slightly above maximum call side open interest. So this being the case, not a lot happening. We saw call side expansion due to the IV spike of the up move, and then we saw call side deflation. Puts have gone up slightly, but for now I'm not going to be risk managing this. Most likely what can happen is we might see a situation where we head all the way down to yesterday's close and take support from there, but the idea will be that dips would more or less get bought at this point of time. So regardless, if our puts really start to bleed, because below 14,800 they will start to bleed, then we'll be risking them off and moving to the 14,550 or 14,500 depending on the situation. Might have to break the trade. So we'll keep you posted. Time is almost 11 o'clock. Not a lot of decay has happened since morning. I'd say if you entered a position right at the open, you probably have 2 or 3 points of decay. So okay, the time is 12 o'clock. One change made to the position. So we've broken down below the day's low, and Bank Nifty is very weak. So is IT, and that being the case, have shifted down the calls by 50 points in order to delta neutralize at 14,800. Previously, the delta would neutralize at 14,825, basically taking in additional call side credit to protect against these puts really exploding in case we have a cascading down move. Next step will be to see if we test towards 14,750. So if we start making, I'm still of the relative opinion that we shouldn't have too much downside from here, considering the data from the derivative so far, but there is a complete possibility, and in that case the idea will be to roll these down to 14,550. Keep you posted. Time is 12:20, and right now the puts are spiking due to the down move that we're seeing. Okay, market continues to remain range bound, but what we're seeing is downside move is leading to like a put side IV spike. Calls are more or less compensating for it, but potentially if there is a breakdown, I don't want to be sitting on a higher risk spread. So what I've done is I've spaced out slightly further. So moved the puts away by 50 points and moved the calls also away by 50 points. So we took a 400 point triangle and made it a 500 point triangle. Because generally what will happen on a Friday is towards the last few hours, people who have gone long, people who have gone short in options, they start unwinding, especially the OTM ones. You'll see some amount of price decay. So right now 500 points triangle is trading at something like 82.5, 83, and could close at something like 75 even by the close. So for that reason, have just taken off the risk on the put as well as the call, moved them both away by 50 points. We're sitting in a good positive of 6 points, and the idea will be to take that home, not expecting there to be some big kind of boom, but it's possible, and for that just taken risk off. Okay, time is 1:30, and more or less in line with the view, triangle is now decaying to less than 80, and that's fine. And here's the thing as to why even though we've slowly more or less on the chart shown like a down trend for the day, I mean definitely downtrend, So on the OI front, if you check, and this was last updated when 3 months ago. So there's a lot of put writing. There's deep in the money put writing. There's a lot of short straddles at 14,800. You're seeing call unwinding and put writing all the way up to 15,000. And that's exactly why, obviously, yes, when I had to risk manage, that's why when I did risk manage, I not only moved out of, when I had to risk manage puts, I not only moved out of the 14,600 put and moved it lower, I also moved out of the 15,000 put and moved it higher. So yeah, there is strength in what the OI data is suggesting, which is why it is better not to say, okay, market is dipping from the highs, make a negative view, because very clearly, as we're heading into the day, we're seeing more and more that we're finding stability at 14,800, even though we are dipping, and that's leading to spikes on the put side. So I exited this at around 67 because I had to manage the risk at that point. There's no other option, but did also with managing risk on the call side at the same time. So more or less position looks comfortable. We are perfectly equidistant, 250 points in either direction, and the same logic from the beginning of the day holds. There's not much to go over today because there's not a lot happening. Okay, the time is 2:30, and not much has happened. Market took stability, so the over deflation that had happened on the calls is now neutralized. The puts also have lost quite a bit, and we continue to stay more or less in the range. The idea from here will be to trail stop loss by 1.5 points, more or less. So if it looks like we are heading down by 1.5 points on this triangle, we'll just use that as an exit. So yeah, generally towards the last 1 hour on a Friday, you get good amount of fall off in premiums unless there's some kind of trending move. And yeah, so essentially 1.5, 2 point stop loss versus potential gain of close to what the last hour gain can be, the 4 or 5 points easily. Okay, we're seeing a steady up move, and so far the same mark to market. So exit is not getting triggered. I don't necessarily want to move my puts up, and more or less we'll look at taking an exit if we start heading to the day's high. What's happening is OI is looking extremely bullish, like it's been looking bullish all day, but right now we see puts being written all the way up to 15,000 and calls being unwound below 14,800. So that is giving very bullish signals, and overall the setup is sort of like I don't generally do this, but if somebody was forced to say, okay, are we going to gap up or gap down on Monday? The current positioning of the market is for a gap up, especially if we close at the day's high. And yeah, I mean, I guess our position will not necessarily get burnt if we do close at the day's high, which is why the risk reward on staying in the position for the last 45 minutes still makes sense. Yeah, OI positioning, very bullish. More from what we're seeing in monthly and the weekly. See, monthly, massive put writing at 14,600, 14,700, 14,800, 14,850, 14,900, 15,000, and call unwinding as well. So yeah, anyway, still trailing the stop loss at this point of time. Okay, made a major mess up and couldn't record it as well, but basically what happened was instead of, yeah, I tried to exit with a basket order. Instead of setting it to MIS, I had set it to normal. So I placed some normal orders, and that kind of messed up my exit, and I ended up exiting the put without exiting the call. My entire idea behind exiting the position was that towards the end we are seeing an up move wherein we might close towards the day's high, expand calls, and potentially with the fear of gap up with the current OI positioning, it would be a problem. So yeah, I was trying to exit, couldn't exit, made an execution error, and more or less what that did is burn us. So for the intraday trade itself, this 6,000 is from TCS, the position that we booked. So we booked the TCS put spread. So booked like 22,000 of profit there, and we're up around 1.5, and that's a 0.5% return more or less on the day. And what we're saying towards the end is, because we are positioning for a gap up type situation on Monday, I'm not expecting there to be much of a fall off in premiums going forward. Wasn't a great day for DK in general, considering that it was a Friday. I don't even think the money straddle has decayed much. So, yeah, fair enough. So that's the day. Thank you so much for watching. I hope you had a good trading day. Was a relatively alright day and is setting up for some kind of a big up move. That's what market positioning looks like at this point of time for Monday. And have a nice weekend, and I will catch you later.
Thank you for watching. Please post any questions you have in the comment section. Also, do not forget to like and share the video and subscribe to the channel. To find us on Twitter, Telegram, and Facebook, use the username NiftyBN. Also, we post some of our trades to the community tab, so do not forget to check that from time to time.